Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Bloomberg learns the US is pressuring allies to toughen chip restrictions on China. As President Trump says Canada and Mexico tariffs due next week are moving forward. Asian stocks slumped the most in 3 weeks. A split with allies. The US votes against a UN resolution condemning Russia's war on Ukraine as France's president tries to get Europe back to the table for talks with Moscow. Plus, Friedrich Merz pushes to approve 200 billion euros in defence spending as Germany's Chancellor-in-waiting looks to form a coalition government. Happy Tuesday. European stocks searching for direction after a bit of softness by the end of the close yesterday. The US story as well was negative, with the Nasdaq 100 falling more than 1% and the S&P closing lower by 0.5% as well. Selling off and pressure coming through for the likes of Microsoft. Nvidia earnings on Wednesday could be the catalyst for these markets. That is potentially the earnings story of the week. European stocks futures then pointing lower by 0.1% this Tuesday. FTSE 100 futures here in the UK flat. S&P futures after the losses of yesterday looking to gain back above that 6,000 level. They fell below 6,000 by the end of the close yesterday, currently looking to add 0.1%. Nasdaq 100 futures after the selling pressure yesterday pointing higher by 13 points. Let's flip the board and have a look cross asset. We have seen moves into US Treasuries through the session, yields lower. The 10-year back below 440, currently yielding 437. Euro dollar at 104, just up 0.1% on the single currency. Brent trading a little higher as well, up 0.4%, watching additional sanctions coming through from the Trump administration on Iranian crude, $75 a barrel on Brent, and gold having closed again at record levels yesterday. Currently, a bit of profit taking for the allied metal, down 0.5% in the session at 2,937. Let's cross over to Avril Hong right now, standing by in Singapore for a check on the Asian markets. Avril.
Yeah, Tom, it's been quite a wild session in the Asia Pacific. We saw Japanese stocks leading declines. They're back from a long weekend and they are facing this picture of tech chip names getting hard hit, no thanks to the poor Wall Street handover, but also Trump pressuring allies to help restrict access for China in terms of chips. And that's in terms of the collateral damage kind of playing out in the likes of Tokyo Electron. That's the big drag on the Nikkei today, upwards of 4% in the way of losses on the chip maker. But aside from that, we've been keeping a close watch on the Chinese tech stocks that have been whipsawing. Today, we saw Hang Seng Tech decline as much as 4.5% at one point, then managing slight gains, back down 1% again. Flip the board. All this is really interesting how it managed to pair declines, and some have attributed it to the mainland investors plowing into Hong Kong stocks, buying the dip. But it's also worth noting that when it comes to these mild or reported chip restrictions, that maybe some had been expecting it and they're not as bad as expected. So SMIC, for example, erasing those declines of about 6% earlier. Alibaba, considering how its ADRs fell 11%, this is not too shabby. Some of this, of course, is idiosyncratic. You look at the EV makers like Li Auto, it unveiled photos of its first all-electric SUV, and that's why it's extending 14%. But this is the backdrop that we are seeing in Chinese tech names, for example, their resilience even in the face of Trump policy.
OK, we'll see if that resilience holds for those tech names in face of that additional pressure, as you say. Avril Hong, thank you very much indeed with a check on the Asian markets, joining us out of Singapore. A breaking line right now and staying in Asia. This is around Apple and its business in Indonesia, population of about 280 million people. And this is news that Indonesia has approved the sale of the latest iPhone 16. This is after wrangling between the country and Apple since October over manufacturing requirements and a commitment to invest about $1 billion in that country. Apple will commit to that investment, but also train local people there, the local population, in research and development on the company's products. So Apple and Indonesia coming to an agreement, the ban on the iPhone 16 and sales of that handset in the Indonesian market. That ban has now been lifted. We continue, of course, to watch the impact of that through the session. Now, the Trump administration is planning to expand efforts to limit China's tech advancements, as Averill was saying, including tougher chip curbs and pressuring allies to escalate restrictions. Let's get more details then from Bloomberg's China correspondent Min Min Lo, who's been following all of this for us. Min Min, what's the latest on these discussions then?
Hey, Tom. So the Trump administration is sketching out a stronger regulatory regime. And from our sources, Trump officials had been meeting with their counterparts from Japan and the Netherlands. They're looking to possibly disallow some of these engineers from ASML, from Tokyo Electron, from servicing the chip-making gears in China. And of course, the halting of such servicing would eventually lead to these chip-making gears losing their functionality. And also, Trump officials looking to tighten the noose on the export of chips to China, including potentially restricting these chips that were specifically designed for the Chinese market in order to meet the pre-existing restrictions that had been put in place by the Biden administration, plus perhaps more sanctions on specific Chinese companies such as Changxin Memory Technology, which has been at the forefront of the Chinese tech race, possibly on SMIC as well, which is the major manufacturing partner for Huawei. And this comes as Reuters earlier this morning reported that Chinese companies had actually been stockpiling that H20 chips. These are the scaled-back version of the Nvidia chips that were tailored for the Chinese markets, and these Chinese companies had been buying them up on the back of stronger demand after that DeepSeek-related rally and more developmental activities coming in the AI space. And plus, officials also looking at potentially lowering the threshold for that cap in computing power that could be exported out of the US to other countries without additional licensing requirement. And this has already drawn rebuke from the likes of Nvidia that had been hoping that the Trump administration would have a lighter regulatory touch when it comes to this entire chips framework. And you look at the market reaction, quite surprising that in fact SMIC has been moving up on the back of this news, and perhaps reflecting the sentiment there that maybe this will just cause Chinese companies to pour more resources, to push forward with more sort of out of the box innovation that had fueled the kind of breakthroughs that we have seen from DeepSeek. And you have Chinese companies like ByteDance, like DeepSeek, looking at ways to skirt the rules without violating US restrictions, for example, by renting these AI servers overseas from data centers in Southeast Asia, for example, that had been powered by Nvidia chips. But even that could eventually be affected as well by the new US restrictions that would apply to most countries when it comes to the cap in that computing power that could be exported. So it's a game of cat and mouse here, regulatory catch-up that will likely continue to play out for the rest of this year.
Yeah, a game of cat and mouse and trying to close off some of those loopholes, at least from the perspective of the Trump administration. Min Min Lo, thank you very much indeed. Our China correspondent will be looking, of course, for any commentary from Nvidia executives. Jensen Huang, of course, the CEO, when those earnings drop from that company tomorrow on the restrictions from the Trump administration. Now, the US has withdrawn its previous stance condemning Russia's invasion of Ukraine at the United Nations. It is a stark policy reversal from President Biden's administration and another blow to ties with the EU. This comes as French President Emmanuel Macron visited Trump in Washington in an effort to get Europe back to the table in talks with Russia.
We're working on deals right now, transactions right now, and in particular, the big one is to get the war stopped, whether it's ceasefire or direct to an agreement.
As it is now written and negotiated, and as this meeting is scheduled, is an important step forward, full-fledged peace agreement.
Well, joining us now is Bloomberg's Caroline Cornat on Macron's visit to Washington. But let's start with Greg Sullivan as well, our Russia economy and government editor. Greg, this is a marked change, of course, from the United States in terms of its relationship with Russia and the way it phrases and frames the invasion of Ukraine. What is Trump's strategy here? Has he really moved over to Putin's side? Is that how clearly we should be interpreting this?
Well, what we do know is that Trump has said clearly he wants to end this war. European allies worry that that could be on terms that are more favorable to Russia. We already have seen that this White House is more agreeable to the idea of keeping Ukraine out of NATO, letting Russia retain some of the territories that it's captured. And there's also this, and with this UN resolution vote, the stark symbolism of that, voting with Russia and with North Korea and Belarus against the European allies, that reinforces all of those worries. There's the real sense here that Trump would rather talk to Putin than Europe, and that's quite a worrying development for European allies.
Greg, where do we stand in terms of the chances of a ceasefire actually transpiring now between Russia and Ukraine? Are we moving forward on that front?
Well, it's very clear that Trump is intent on trying to reach that. We heard from the French President Emmanuel Macron in Washington saying that it was feasible to get some sort of truce, but a lot of major obstacles do remain. I want to talk about two of those real fast. The first is, how long would such a ceasefire hold? We heard from Trump just there that he said whether that's a short-term truce or a long-term ceasefire, but Russia has ruled out any kind of truce before a longer-term negotiation is reached. They're making battlefield gains, and they see that strengthening their negotiating position, and they don't want to stop the fighting until there's a long-term settlement. The other question, of course, is security guarantees. This has been a question at the center for a while, and it's not clear what would satisfy all parties on that front.
Caroline, let's bring you in at this point. What did Trump and Macron discuss? Were there any achievements? Did Macron manage to move the dial in Europe's favour?
Clearly, Emmanuel Macron thinks he was in charge of European diplomacy here. We were right in the middle of the German elections. And remember, Macron gathered these two meetings in Paris last week to discuss Ukraine. So he wanted to show that he has what he calls a special relationship with Donald Trump. Trump already came to Paris early December, where he had a trilateral meeting with Ukrainian President Zelensky. Macron said during the press conference that he had stopped talking with Vladimir Putin after the war crimes in Bucha, but now perhaps was a good time, a good reason to re-engage with this new US administration, because Macron did believe, he said, that Donald Trump looked strong in front of Vladimir Putin. So clearly Macron's goal was to keep Europe at the table of negotiations on one side and to keep some sort of US support in light of perhaps a future ceasefire, a future peace deal. But Donald Trump really seemed mainly interested in this agreement on critical minerals and rare earth, a way, he said, to recoup the money we have sent to Ukraine.
So, Caroline, just to be clear, did Macron achieve what he set out to achieve with this visit?
That's very hard to tell whether he was satisfied or not, but Emmanuel Macron did say several times during the press conference that this was a turning point. And he even gave one interview to Fox News, so really trying not to confront Donald Trump publicly. Remember, Fox is actually this media where Donald Trump said last week that Zelensky was not welcome at the table of negotiations. Now, the gesture on occasion during the press conference was a little strange. Trump congratulated Macron on rebuilding of Notre Dame, but on several occasions he was really focused on his domestic agenda, answering a lot of domestic questions and sometimes totally ignoring Macron for a good chunk of this press conference. Now, Emmanuel Macron has to take everything back home and obviously talk to his counterparts here in Europe. You know, the UK Prime Minister Keir Starmer is also traveling to Washington on Thursday to meet with Donald Trump. Macron and Starmer had a phone call together on Sunday in order to be on the same page when it comes to peacekeepers on the ground and air defense in case of another attack. We'll see if there's any achievement before this crucial EU summit on March 6th. And finally, one word on the domestic agenda of Emmanuel Macron. As you know, Emmanuel Macron has been very weak at home since last year, since the snap election. So clearly for him, shining internationally and looking like he is key in these negotiations for the peace in Ukraine could also boost his popularity back home.
OK, yeah, important context. Bloomberg's Caroline Conant in Paris, thank you. And of course, Greg Sullivan in Dubai. Thank you both very much. Now, at 9:40 a.m. UK time, we will be speaking to Hermitage Capital Management co-founder and CEO Bill Browder, who, of course, has been one of the leading voices for sanctions on Russia and President Vladimir Putin, someone who comes at this with that unique perspective as well. So certainly tune in for that interview. Coming up, Bloomberg has learned that Germany's Chancellor-in-Waiting, Friedrich Merz, has started talks with the SPD, the socialists, to force through 200 billion euros in defence spending. The details are next. This is Bloomberg.
Wir werden jetzt in den nächsten Tagen Gespräche führen.
We will be holding talks over the next few days. The talks have already been prepared. Some conversations have already taken place. And in terms of order, I will speak first to the SPD party leader and then also with the chancellor so that we can create a reasonable transition phase, which inevitably will take a few weeks.
CDU-CSU leader and incoming German Chancellor Friedrich Merz speaking there. Now, with Friedrich Merz set to be Germany's next Chancellor, of course, he will have to negotiate his way into power, most likely with a coalition with the socialists, the SPD. This comes after Bloomberg learned that the Chancellor-in-Waiting is speaking with the Social Democrats to quickly approve 200 billion euros in defence spending. I'm joined now by Bloomberg's Germany bureau chief, Christoph Rauwald, who, of course, with the team has broken this news for us. Christoph, it's been such a busy period for you and the team. Talk us through why Merz is rushing through this deal. He seems to be acting with pace at this point.
He absolutely does, Tom. You're very right. Good morning. And I think earlier in the program, you already discussed that both Europe and Germany are actually under time pressure to come up with a plan and with the financing to be able to continue the support for Ukraine. Since the US has taken a different view on the whole situation with that controversial statement from Trump and the US administration describing Russia not longer as like the country that started the war, but taking a more neutral stance, which of course poses a major problem for Europe, and this is why the German government in particular really is like very keen to get things going and make sure that the defense spending is in place.
Okay, so Germany's moving forward. What about the EU, Christoph?
The EU, at the moment, I think there are various strands across the EU. You have, of course, Germany with the changeover in government. We had Macron already in the US yesterday, as we've seen. And I think generally the EU is very much scrambling to come up with a plan to be able to continue the support for Ukraine, potentially without the strong involvement of the US that we've seen in the past. The US has been the biggest supporter in terms of like military equipment, ammunition, and that is a role that Europe will need to fill.
Christoph Rau, thank you very much indeed for the latest on that story and Germany moving forward potentially with additional funding for defence. Coming up, we're going to be live in Dubai at the Bank of America Investor Summit with an exclusive conversation with the former governor of the Reserve Bank of India. That is next. This is Bloomberg. India's economy has seen its weakest growth since the pandemic as geopolitical risks and tariffs threaten the nation's economic recovery. While the government is focused on fiscal consolidation, the Reserve Bank of India has started cutting rates in order to revive growth. Let's head over to Dubai now and the Bank of America Investor Summit. Bloomberg's Guy Johnson is there with someone who can speak, of course, with great expertise on the India story. Guy.
Morning, Tom. Rajan, 23rd governor of the RBI. I think I'm correct in that.
Yes.
Obviously now of the Booth School in Chicago. Nice to see you. Tom, just talking about the fact we've got GDP numbers coming out on Friday. I think they're expected to tick a little bit higher. I think we're going from the 5s to the 6s. That kind of feels like we're still below potential. Where is potential? How do we get to it? Why are we below potential?
Well, depends, as all economists say, on what you mean by potential. 6 is about what we've done for the last 25 years. Extremely creditable, except when compared to China. But also compared to what we need in terms of employing the people who are coming into the labor force right now. I would say that if you look at our ability to employ people, growth rate should be more like 8.5.
Right.
And so we're below that. And so we will go up. I think some of the blip downwards was because infrastructure was sort of postponed while the elections were taking place last year. I think that'll come back up. But I really think to go to India's true potential, India needs another 2 percentage points of growth.
Is India a service sector economy now?
It is, interestingly, becoming more so. I mean, we saw last quarter, you saw exports in services for the first time overtake manufacturing. They were only 69% of manufacturing in 2019. It's a big change. And I think part of this is technological, that the fact that you can work at a distance means you can work as much in Seattle to produce for Chicago. You can now work in Bangalore and produce for Chicago. A lot more firms are having operations in India of sizable nature so as to service their international operations.
India's really good at software. Is it going to be really good at AI? Because China, all we're hearing out of China at the moment is that's the new big focus.
That's the key question. Now, India doesn't have huge firms focused on AI, but a lot of small to medium-sized firms are trying to do that, and much more in the way of applications of AI. So in medicine, in a lot of stuff in
Is that going to be enough, though? Is that something that does India need to be at the kind of the coalface in terms of producing models and being right at the cutting edge, or actually is the money going to be made ultimately probably further down the food chain, i.e. in some of those applications?
I think both places, but I think the applications also offer a lot of opportunity.
Yeah.
Indian engineers are cheap.
Yeah.
And getting them to, now many of them are learning what it takes in machine learning and so on, and getting them to work on applications, how do you take some of these big models and apply them to the nature of work? And I've seen a number of Indian firms are already using AI at the cutting edge, in the sense that customer service reps, they're thinking of replacing them with AI because they do a better job and speak 7 Indian languages rather than one Indian language.
Just to circle back to the growth story, 23rd governor of the RBI. Should the RBI does India have a cost of money problem at the moment?
I don't think that's a central problem. I think what is holding back growth for India right now is a mismatch in talents between what the population, what the working sort of labor force has, and what firms need, what the urban population needs in terms of skills. And so I think what India has to do is ramp up that skill base so that all the people who are coming into the labor force can actually do jobs which the economy is creating. I think the cost of money is going to come down somewhat. I think the RBI did cut interest rates, may cut in the future. But I think the real issue for India is more improving the supply potential. And that implies working on people's human capital and skills.
Do you think the Modi government would be okay with a Mar-a-Lago Accord of some shape or form?
Well, it depends on what that Mar-a-Lago...
What could it look like?
Well, look, I think there are contradictory elements of the Trump administration's sort of objectives. On the one hand, they want to bring down the U.S. trade deficit.
Yeah.
On the other hand, they don't want to lose the U.S.'s preeminence in attracting financial flows from across the world, because, of course, that helps support U.S. debt and keeps interest rates from going through the roof.
Yeah.
How do you square all that, to my mind, is a big uncertainty. And I think as far as these reciprocal tariffs that are being threatened go, I think India will be happy to enter into a dialogue with the administration. I think India will up oil purchases, some defense purchases. And India may reduce tariffs in a number of areas which are not very politically sensitive. Agriculture, very politically sensitive, but some of the other areas it can do. I think those won't be bad for Indian growth, because I think more competition in India will help Indian industry and grow.
Raghu, great to see you. Thanks very much indeed for joining us, Raghu Rajan. Tom, very quickly, back to you. They're playing the music.
Guy, thank you. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Bloomberg learns the US is pressuring allies to toughen chip restrictions on China. As President Trump says, Canada and Mexico tariffs due next week are moving forward. Asian stocks slumped the most in 3 weeks. A split with allies. The US sides with Russia against a UN resolution condemning the war in Ukraine. That's as France's president tries to get Europe back to the table for talks with Moscow. Plus, Friedrich Merz pushes to approve 200 billion euros in defence spending as Germany's Chancellor-in-Waiting looks to form a coalition government. Let's check in on the markets then. After some softness yesterday across Europe and the US, European futures currently pointing down by 0.2%. The FTSE 100 is flat. S&P futures stateside pointing to gains of 0.1% after falling 0.5 yesterday. Nasdaq 100 futures looking to add just 2 points after falling 1.2% yesterday. We'll look ahead to Nvidia earnings, of course, on Wednesday. Let's flip the board cross-asset and see how the Treasury story is shaping up. Yields down, Treasury's bid currently at 4.37, so back below 4.40 on the benchmark US 10-year. You're going to have other Fed speakers coming out with their analysis on the Fed's next steps later today, so watch for that and the sensitivity of the Treasury curve on Fed speakers later today out of the US. Euro dollar at 1.04. The single currency is up just 0.1%. Brent trading at $75 a barrel, gaining 0.4% so far in the session. The Trump administration putting additional curbs on Iranian crude, additional sanctions on Iran, and that is supporting oil so far in the session. We'll get an analysis on the oil story in the next part of this show, in the next few minutes with Nadia, Martin, Wiggen of Svelland Capital, so stay for that interview as well. And gold having reached record highs yesterday, currently profit-taking, it seems, across the yellow metal, down 0.6%, but it has seen that haven bid, 2,934. Now, finance ministers and central bank governors are meeting in Cape Town for the G20 summit. It is the first summit since Donald Trump returned to the White House. Top of the agenda at the summit will be the impact of the US president's proposed tariffs on the global economy. Let's cross over to the G20 and Bloomberg's Jennifer Zabasaja, who's standing by with a guest. Jen.
Yeah, Tom, thanks so much. I am here with South African Reserve Bank Governor, Central Bank Governor Lesetja Kganyago. We were just saying we haven't spoken in South Africa, so appreciate your time, Governor. Let's just start here. Your job, one of your mandates is price stability. Undoubtedly, that has gotten harder considering all the uncertainty that is persisting right now. But then also a lot of concerns about inflation ticking up. Where are your concerns placed right now?
Well, we successfully brought inflation to target. And part of it had been that, like other major emerging markets, we responded to inflation in 2021 before the great inflation of 2022 set in. The advanced economies did adjust policy aggressively to bring inflation to target or towards target. And global uncertainty abounds, and at the moment it has generated this uncertainty, and there is a question mark about whether inflation could be resurging and whether central banks are complacent about the re-emergence of inflation. And added to that are the geopolitical risks that are adding to the uncertainty, whether it is in the form of tariffs that are not quite trade related, maybe even politically driven in some instances. And from the textbook, it tells us that when tariffs rise, that you have got inflation rising.
Do you think that's what we are seeing here in South Africa and globally? Do you think there is a resurgence then of inflation that you're expecting?
Well, we expect inflation to be creeping up. We hit a low of 2.8%. The expectation is that it will start to rise, but our baseline is still that it will rise towards our target, which is 4.5%, which is the middle of our inflation target range. But that is the baseline scenario. To the extent that there are tariffs imposed, And to the extent that other countries might respond to the tariffs that are imposed on them, you are going to have a rise in global prices, one, and secondly, you are going to have a slowdown in global trade, and that could impact adversely on global output.
Does that affect your outlook for inflation, though, for the rest of the year, and also for growth here in South Africa?
It adds to the uncertainty. So in the previous meeting that we had, we took a scenario approach, and we had a scenario where we said, if tariffs are imposed, this is how we think the global economy could evolve, and we think that inflation might pick up and it might force central banks that have embarked on a process of reducing restrictiveness in monetary policy to pause or even reverse that course of removing restrictiveness.
Are you thinking about that from the perspective of the Federal Reserve in the U.S.? We're seeing more caution taking place because of what you're saying, this uncertainty. Is that part of the calculus that you are thinking potentially the Fed is going to have to stay higher for longer, therefore that will affect your policy as well?
Well, the decisions of the Fed are decisions of a major economy. We are a small open economy. Those decisions will affect the global economy, and how they feed into our own decision-making process is through two channels. The first channel is the trade channel, which in normal circumstances it would just be that a slowdown in economic growth in the U.S. leads to a decline in our own exports. By contrast, when the economy is doing well, our exports to the U.S. would also do well. Enter tariffs. Once tariffs enter that space, to the extent that the U.S. disinflationary process would slow down or even reverse, it might force policymakers there to reassess their position. Which way they assess it is another matter. The point here is that we would then be affected by a rise in global inflation, and the extent that recalibration of policy leads to tightening of global financial conditions, capital flows, and a repricing of South African assets.
Do you think that will affect then foreign direct investment into South Africa if we do see it play out the way you just outlined there?
Foreign direct investments does not so much respond to monetary policy actions, but the trade policy actions would could actually affect foreign direct investment. How? At the moment, as a small open economy, what we do is we attract foreign direct investment that produces goods that we sell to other countries. So we have got American companies that have established shop in South Africa that are producing to export into the African continent, and some of them back into the United States. And if that is to affect them, then it would affect our FDI.
Really quick, Governor, it sounds like you're saying tariffs are the number one risk that you're facing as a central bank governor in setting policy. Is that fair to say?
Well, tariffs are a risk to the global economy and to the global disinflation process. And what I'm saying is that a year ago, it was not something that we were worried about because it didn't exist. Now that it is here, we have got to take that. We have got to take that into account. And to the extent that it is clear these are the tariffs, and we know that is what we live with, then we can calibrate policy to that extent. The problem is that there is an announcement of some tariffs, a suspension, a restart, a threat to increase the tariffs again, and that adds to the uncertainty.
The confusion is creating a difficult task for you.
Well, I wouldn't quite call it confusion. I would call it the uncertainty that is added, and that is a difficult one for central banks to deal with.
We have to leave it there, Governor. I could talk to you for a lot longer, but have to send it back. That is South African Reserve Bank Governor Lesetja Kganyago here at the G20 meetings. Tom, back to you.
Yeah, really interesting interview. Jen Tabasaja in Cape Town at the G20 meeting, of course, of central bank and finance ministers. Thank you, Jen. Now, Donald Trump said tariffs due to hit Canada and Mexico, staying on the topic of tariffs, next month will go ahead, even as one US official cautioned the schedule could be less certain.
The tariffs are going forward on time, on schedule. This is an abuse that took place for many, many years. And I'm not even blaming the other countries that did this. I blame our leadership for allowing it to happen. I mean, you know, who can blame them if they made these great deals with the United States, took advantage of the United States?
OK, for more on the market impact, let's bring in Bloomberg's Valerie Teitel. Valerie, how have the markets been adjusting to this latest commentary around tariffs from Trump?
The FX markets are still having a complicated time pricing in this risk of Trump tariffs. We did see an effect on the Canadian dollar yesterday. It did weaken over these headlines, and it goes to show just how much Canada has to lose from these tariff negotiations. We had the Bank of Canada governor just last Friday say in a speech that if these tariffs do go ahead, it could dent long-term growth of Canada by 2.5 percentage points of GDP. A lot of brinkmanship ahead. Trump did mention that the schedule of these tariffs is running on time. Let's flip on and just remind ourselves what it's looking like, because we have 3 cases of brinkmanship in just the next 5 weeks, Tom, starting with next Tuesday on March 4th. That's the deadline he gave himself for the Canada and Mexico negotiations. On March 12th, we get those global steel and aluminum tariffs on imports. And then April 2nd, another big one. That is what he has threatened could be reciprocal tariffs. They could come as soon as April 2nd. But that March 4th date could be the next catalyst for a market reaction, Tom, given the economic ties between the U.S. and Canada and the U.S. And Mexico. Mexico is the second biggest when it comes to the U.S. trade deficit between these two countries. Canada isn't far behind as the 6th. So this is one of the key reasons why Trump has his eye on negotiating the USMCA, because of the trade deficit between all those 3 countries combined.
OK, great breakdown of what to expect, or at least what to brace for. Valerie Teitel, thank you very much indeed. Now, some other stories making the news this Tuesday. Bloomberg understands that Elon Musk's SpaceX is seeking to deploy Starlink satellite internet terminals to help upgrade the US Federal Aviation Administration's national airspace system. A source says Musk approved a shipment of 4,000 Starlink terminals last week. An FAA spokesperson confirmed the agency is testing terminals at non-safety critical sites. The effort raising questions about the future of a $2 billion Verizon contract and potential conflicts of interest for Musk's business empire. Meanwhile, Tesla's European sales plunged 45% last month, while rival car makers saw a surge in demand for electric vehicles. The Elon Musk-led company registered fewer than 10,000 cars in January, down from more than 18,000 a year ago. According to the European Automobile Manufacturers Association, total EV deliveries jumped in markets including Germany, the UK and Italy. And we'll discuss the state of the European car industry with the Director General of the EAMA. That is at 8:45 a.m. UK time. To technology now, Bloomberg has learned that Anthropic is close to a deal to raise $3.5 billion at a valuation of over $61 billion. A source tells us the funding round is larger than the AI startup initially planned. We previously reported that Menlo Ventures, General Catalyst and Abu Dhabi's MGX are in talks to back the company. Coming up, high energy costs are one of the most critical issues, of course, for businesses and households in Germany. And as Friedrich Merz looks to form a coalition, we'll discuss the outlook for power prices in Germany, Europe, and the outlook for oil on those new Iran sanctions. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Oil gaining in the session today as the US issues fresh sanctions on Iranian crude, and US President Donald Trump signaled tariffs are still on the cards. European gas markets, meanwhile, have been pricing in a return of Russian gas as storage levels drop to about 40%. Are they right to do that, though? I'm joined now by the director of Svelland Capital, Nadia Wiggen, who always has the expertise on the energy markets. Great to have you in the studio, Nadia. Let's start with what the pulse of the markets right now this week and what it's doing. We're talking about oil higher in the session. That ties into what's happening with Iran. But what are the markets generally telling you at this point?
Right now, the markets expect that OPEC will continue to control the market. That's why we've been in the 70s. And they are probably not really focusing on tariffs and what that can mean from the demand side of the oil market. So when we look at equity markets, when Trump was first elected, the knee-jerk reaction was very negative on renewables, positive for markets, but tariffs were a big, big deal, and that's where it was very negative towards commodities. Now, when we fast forward to where we are on the oil side, the tariffs picture is much more muted than what could be the case. But of course, he's a deal maker, so we have to take it step by step, what he actually does.
Because if tariffs come through as he's proposed, and you say there's also, as you point out, there's all sorts of context and caveats around that, then you could see, of course, a crimp to demand at the same time as Trump is pushing for more output from the US market. So that arguably could set us up for lower prices going forward.
Well, the US, it's hard for that production to come quickly. What he really wants is Saudi Arabia to produce more. It's no surprise to us that, he had the meeting with Putin, as in the US meeting with the Russians in Saudi, because they want that part of the deal. And that, of course, makes sense, right? Get more supply and then think about all of these additional steps.
But you don't think OPEC Plus buckles to Trump's pressure? You think they push back the additional output that they had planned?
Well, this comes to the Iran question, right? Because last time around, he sanctioned Iran really hard, then granted 6 months of waivers for people to keep buying Iranian, while Russia, the U.S. and Saudi Arabia increased production by 2.5 million barrels per day. They don't want to make that mistake again. So maybe there's a middle ground on that side. But what I think is important is that the market is not really focusing on that, because we've seen the equity markets overly price in what may happen, and the physical markets are trying to look at what is happening. And that's why the oil side right now, demand is good and we have low inventories. So oil continues to be supported. We need to see that next step.
Talking of the inventories, what's the inventory story around gas in Europe at this point?
So we're at around 40% storage levels, which is okay, but we can still drop much lower, 30%, 20%. And the problem is to prepare for next winter. So right now, we still have this rule 90% by 1st of November. It's a little bit of flexibility about that by country. Not every country enforces it. The Germans, of course, have the strictest rules on enforcement. They can step in. There are financial penalties, or they can disallow withdrawals. The question is, if they relax that storage target, that could make cheaper gas prices this summer. Because if there's a heat wave in Asia, we don't have to take absolutely everything we can. Right now, we think it's 350 to 400 additional LNG cargoes that have to arrive this year versus last year over the course of the year. So that can make lower prices in the summer, but it can result in much higher prices next winter or heading into next winter when we actually have the demand and if we're short. That's why these storage levels targets exist.
Should the markets be pricing in more Russian gas?
In our view, no. The quickest way to get additional Russian gas is through Ukraine, because that pipeline was only shut 1st of January. However, if there's a forced peace deal on the Ukrainians, are they really going to promote pushing Russian gas? And even if they officially do, and that's $800 million for them versus billions for the Russians, $4 or $5 billion, then we could have people taking that gas, siphoning off gas. We've had this in previous years and previous administrations, not under Zelensky, where this has happened. And given the human toll that has happened in Ukraine, there could be individuals that really don't want this to happen. And I think the market has really dismissed this.
China's going to be focused on the National People's Congress, and there's an expectation that maybe there's more fiscal support for that economy. What is the demand impulse right now from China?
So on the natural gas side, it continues to be very strong. We see that commodity markets are showing that activity in China has probably bottomed out and activity is going higher. On the oil side, when we think about tariffs and all of that, China's only taking 200,000 barrels per day of U.S. crude. They're taking only 6% of their LNG from the U.S. So it's much more flexible because they can just replace that LNG with other purchases. And because the U.S. doesn't sell its LNG with a final destination clause, it's very easy for them to just resell that to Europe. It doesn't mean that demand is lower in China. And the market, I think, misunderstood that. They saw that China was rerouting LNG over to Europe in recent weeks, and they saw that as collapsing demand in China. But that's not the case. It's just about the tariffs. So they'd rather take more gas from, or LNG from Qatar, from other countries, rather than from the U.S.
OK, and we'll see, of course, if energy is part of any deal that comes to pass between China and the U.S., if indeed we do get some kind of trade deal, as Trump has hinted at and suggested. OK, thank you very much indeed for the analysis and expertise, of course, across the gas and oil markets. Svelland Capital's Nadia, Martin, Wiggen. Markets should not be pricing in additional Russian gas at this stage. That would be premature, the line there from Nadia. On that story, there's plenty more coming up. Stay with us. This is Bloomberg.
Europe is loaning the money to Ukraine. They get their money back.
No, in fact, to be frank, we paid 60% of the total effort, and it was through, like the US, loans, guarantee, grants, and we provided real money, to be clear.
OK, French President Emmanuel Macron with US President Donald Trump doing a bit of a correct there in terms of Europe's support for Ukraine. And, of course, that ties into the defence story. And we have news reporting from our team in Berlin that the incoming Chancellor of Germany, Friedrich Merz, is looking alongside his socialist colleagues to push through an emergency funding package, potentially around 200 billion euros in the current parliament. So before the new members of parliament take their seats in the Bundestag. So we look at the support then that's going to come through the defence stocks that have already rallied year to date. We'll see if that story, of course, gets more details, but we watch that and to what extent it further supports the defence stock rally in Europe. And you've seen those gains there, more than 30% year to date in the upside for those defence names. Rheinmetall, of course, in Germany, one of the key beneficiaries, currently up 57% year to date. So watch those defence stocks at the open, of course, 8 a.m. UK time. Let's flip the board and have a look at a very different story, but ties into the Trump administration, which is Tesla. And, of course, Elon Musk has been meddling in the politics of Germany and the UK as well. Tesla, let's see if that's part of the story, because Tesla sales in Europe have plummeted, even as EV sales have grown and soared, in fact. So Tesla sales falling 45% in Europe in the month of January. That's as EV sales overall rose 37%. Here in the UK, BYD is selling more cars than Tesla for the first time ever. Let's flip the board and have a look at Nvidia. This is the big one when it comes to earnings and arguably overall market sentiment, with those numbers dropping tomorrow. Hedge funds reducing their exposure to the Mag 7 stocks. What does that tell us about sentiment? That is the story of tomorrow. That is arguably the story of the week when it comes to these markets. At 9:40 a.m., by the way, we're going to be speaking to Hermitage Capital Management CEO Bill Browder. The opening trade is up next, though. This is Bloomberg.